An Introduction to Student Finance for students from the UK. This presentation will cover what financial support is available for students, how you can get it, and how and when to repay your student loan. There are three main areas of financial support that you can access to help pay for your university studies: a tuition fee loan, a maintenance loan, and additional support. The simplest of these three is the tuition fee loan. Public universities are allowed to charge up to £9,250 per year in tuition fees for UK students. At Huddersfield, we currently charge £9,250 per year for all of our full-time undergraduate taught courses and £1,000 for any year that a student is undertaking an organised work placement. Students are not asked to pay their tuition fee up front. A tuition fee loan is available for UK students to cover the full fee charged by a public university or college for their undergraduate course. Tuition fee loans don't depend on your household income or any other circumstances. All UK students who haven't done an undergraduate degree before will be eligible for whatever the university charges, up to the £9,250 per year limit. The tuition fee loan is paid directly to your university or college at the start of the academic year. This loan is repayable, but only after you've graduated and are earning over a certain amount of money, called the repayment threshold. At the moment, the repayment threshold is £26,575. The second part of the financial support you'll be able to access will be the maintenance loan. This is a loan paid directly to you in 3 instalments spread across the year. It is meant to help you with your expenses whilst at university, from accommodation and transport to food and drink, entertainment and bills. All UK students can get some support towards living costs, and this is paid directly into your bank account each term. Your maintenance loan is added to your tuition fee and repaid as one when you're earning over the repayment threshold. But the amount of maintenance loan you can get depends on 2 factors: where you live and study, and your household income. Household income is the amount earned by your parents or family that you live with. If your household income is lower, you'll be eligible for more student loan, and if your household income is higher, you'll be eligible for less. And if you decide to live at home whilst at university, you'll be entitled to slightly less maintenance loan than if you live away from home. If you found that a little confusing, hopefully this table will help. It illustrates how your household income and living situation might impact upon the amount you can borrow for your maintenance loan based on this year's figures. So for example, if your household income is £40,000 and you live away from home at university, anywhere outside of London, you'd be eligible for £7,225 maintenance loan. This will be divided by 3 and paid to you in 3 instalments across the year at the beginning of each term. If you know your household income, there is an online student finance calculator that can give you an idea of the maintenance loan you'd be eligible for. Just search for Student Finance Calculator. On top of these repayable loans from student finance, there might be additional financial support that you can access. There is a new nationwide training grant available for students on NHS courses. Visit nhsbsa.nhs.uk and search for Learning Support Fund for more information. You might also be able to access bursaries and scholarships from the university you attend, which can take into account your personal circumstances, like your household income or your academic performance. These might be available for all students, or just for those studying particular subjects. Every university will have their own bursaries and scholarships, with a different set of criteria. If you have a learning difficulty, health problem or disability, you can apply for Disabled Students Allowance from the government, which will be based on your individual needs. The University of Huddersfield offers a number of undergraduate scholarships. We offer £1,000 to all new students who have 120 UCAS points or more, and whose family income is less than £25,000 per year. You don't need to apply for this. You should receive a letter in your first term to let you know you're going to receive it. We also have subject-specific scholarships available within Applied Sciences, Music, Music Technology, and Engineering Foundation Year. You can find out more about these by visiting our Fees and Finance web pages and clicking on Undergraduate Scholarships. As well as your loan and any bursaries or scholarships you receive, you can also support yourself through a combination of part-time work, summer or gap year work, and parental support. Part-time work and summer work are very common among university students and can help you build additional skills to add to your CV, as well as top up your income. So, how do you apply for student finance? You need to apply online for your tuition fee loan and your maintenance loan on your respective government portal. In England, this is found at gov.uk/student-finance. Scotland, Wales and Northern Ireland have their own nation-specific government portal. English applications for student finance open in the spring before you are due to start university, so 2021 applicants will be able to begin their applications in February or March 2021. The deadline for applications is at the end of May of the same year. Please don't miss this deadline, or else it can't be guaranteed that you'll receive your loan before the start of your course. You don't need a confirmed place at university or to be sure which university you'll be going to when you apply. Simply state your preferred or most likely course choice. You can change this later if needed. You'll need to fill in your personal details, course choices, and provide evidence of your household income, so make sure you have all this to hand when filling in the form. Finally, something that is important for everyone to know is how and when you repay your student loan. Once you graduate, you will repay 9% of your income that is over the repayment threshold, which is currently £26,575. If you're employed, deductions will be made directly from your pay through the HMRC tax system. Interest is applied to the loan balance, not the payments, and is linked to inflation. The table demonstrates how much you would repay at different income points at the current threshold. If your income was £30,000, that is £3,425 above the threshold, so this is the amount that would be taken into consideration for repayment purposes. 9% of this, split across the year, would mean you'd make an approximate monthly payment of £25.70. As your income rises, so do your repayments. Monthly repayments begin from the April after graduation, but they will not start until your income exceeds the threshold. So if your first graduate job pays £25,000, you wouldn't start making any repayments immediately until you get a pay rise. The monthly repayments are always based on your earnings, not the amount that you borrowed. If at any point your income falls below the threshold, repayments will stop or pause. This applies even if you previously earned more or your partner earns above the threshold. Repayments are based on your current personal income. Any outstanding balance that you haven't paid off will be cancelled 30 years after entering repayment.